Sam Altman admits on X that they've run out of GPUs, right? Like, how does that happen? How does a company the size and scope of OpenAI, who's supposedly investing $500 billion over 4 years to build data centers, run out of GPUs? It's just an astonishing admission. And it makes me, it made me wonder, like, why not wait? So at the same time, he said, don't worry, we'll have, quote, tens of thousands of new chips next week. So if you have tens of thousands of new chips coming in, like in 4 days, why not wait 4 days? Why feel this pressure to release now? And I think there were two factors. One was Grok 3, as you say, and one was Claude 3.7.
Welcome to Software Snack Bites. I'm your host, Shomik Ghosh, as always here, and we're going to be trying something new. We'll hear what the crowd says, but me and my colleague Ron Miller, who used to be senior editor at TechCrunch, we're basically going to go and talk about enterprise news. And so, as you can imagine, it's something that both Ron and I and the rest of the team read here quite often. We have the Fast Forward newsletter where Ron writes about not only trends, but also interviews CIOs, CISOs, CTOs of large enterprises. We have Ed's, what's hot in IT and VC newsletter.
Excellent newsletter every week from him.
Yeah, he's been cranking that out on was it Saturdays? On Saturdays for a very long time. It's kind of crazy. Rain or shine, whether he's been out late or not, he gets it out there. So it's a testament to all of us. But because of that, I think this will just be a cool forum for us to actually talk about some of these topics in more detail. And so, Ron, welcome to the show, and we'll see how it goes.
Yeah, it's great to be here. Great to try and put this together. I told you when we were talking about doing this that I've done this with some other people where I go on other people's podcasts and I talk about enterprise news. I'm like, why not do it on your podcast since you're my colleague?
True. Yeah.
So we're giving it a shot.
Yeah, that's right. Well, so I think let's kick things off here. Just we had Nvidia earnings. Just absolutely bonkers numbers and growth, just insane. That being said, the market reaction was also kind of wild. So
It was.
so maybe just we can just riff off of what happened there and go from there. And so I guess just to start, I can lay out some numbers quickly, and I think you have some numbers that you worked on.
I don't want to go into all of them because there's a lot. But it's just to show their growth.
Yeah. So the company reported $39.3 billion in revenue, which was up 78% year over year, and importantly, also their guidance of $43 billion for the first quarter was actually above expectations. So on the surface and on the top line, everything is cranking, right? The world is good. CapEx is growing at every single company. But what kind of led to a little bit of the sell-off, so to speak, was gross margins are expected to actually be around 70%, which is a significant step down. And this could lead people to think about, are there pricing pressures? What is the mix shift? Is Blackwell shipping or not? And so we can kind of talk about that. But I guess, Ron, you have some kind of numbers just to talk about just the growth.
Just looking, it's such a crazy week, right? They give their earnings last week. You think how can you have a better report than they put out, and up 78%. But if you start to go back in history, not too far, there's a trajectory that they've been on. At the end of 2023, they reported $27 billion for the fiscal year, which is
crazy.
Just bonkers when you consider that the 2025 fiscal year, which closed just at the end of the year, they were up to $130.5 billion. So that's in a 2 fiscal year cycle. So they were going through these quarters where they were up 250%, 270%. And, in some ways, Shomik, it reminded me a little bit of the craziness with Zoom that we saw in 21 and 22. And then slowly it went down, and starting to see Nvidia slowly go down in terms of the growth. And as you said, the gross margins are slipping a little bit. The cost of doing business is going up, but it's hard to say that, Nvidia is in trouble, even with the stock decline that we saw yesterday, which was bonkers. It was $265 billion loss in one day in value. I mean, you don't get to see that very often, but you don't have many $3 trillion companies, right? So, what is Wall Street worried about? Well, there's like a bunch of things that are kind of banging around in the background. One of them are the tariffs that were, made official today, 25% to our friends to the north and our friends to the south, who maybe are not our friends anymore.
Probably not.
25% tariff. But that's going to have some impact, right? There's this 10% tariff that's been slapped on in China as well, which is, even though it's not as big, could be more significant because of the size of the market. So there's some headwinds there, but the demand doesn't seem to be going away, and we can put that in perspective a couple of ways. First of all, there's the data center craziness that's going on. I wrote about it a couple of weeks ago. I called it the great data center boom of 2025, and the big five companies, Microsoft, Amazon, Meta, Alphabet, and OpenAI, all accounted for $420 billion in promised investment in data centers, all to fuel generative AI, right? So if that's kind of money is being poured in, and it's to fuel generative AI, they're going to need a lot of chips, right? a lot of chips. So you would think the future is bright. So in spite of some of the things that we're hearing, and also just sort of keeping that loss in perspective, because the information reported that, the $265 billion loss, a 9% loss in value, is stacked up against 171% stock price gain last year.
Yeah. Not a bad gain, right?
So I mean, I think people who invested, even, I think they're doing all right. And, with this kind of data center, and the models coming out every week, people need GPUs, and we can start to talk about that, and maybe move into Satya's comments last
Yeah.
week as well.
Yeah. So a couple things I'd probably add just for some context is like, so one, we saw that DeepSeek moment, right? The funniest thing was like DeepSeek went to the top of the charts and literally was scrambling to get GPUs to serve the customers that were trying to get their demand. So yes, like inference is going to create more demand for GPUs. We're going to continue to see that. Why, just like to contextualize why Wall Street may be a little bit worried is like those tariffs, but also you do have this dynamic where, when gross margins go down, right, it does make you wonder about one, pricing power. Like, does Nvidia still have pricing power with their customers, or is there other competition that's coming in? In this case, actually, it's less about other competitors coming in. It's actually the Grace Blackwell, which is their CPU plus GPU kind of optimized sort of stack. That actually has like a pretty high price to it, and although they've started to ship it, it hasn't really ramped. And so you have this weird kind of mix shift where you're getting the Blackwell 200s, the B200s, the B100s, the H whatever, the Hopper ones. Right. All of those are selling, but those are actually priced lower, and so that's kind of impacting margins until we see this trend. And so kind of it seems like Wall Street's asking, hey, like where's the sauce, right? Show us that you're, this new thing is what everyone's buying. And I'll be honest, like I think me and you both believe that everyone's buying that. But within that context, maybe let's kind of talk about what the Microsoft CEO Satya Nadella said, and kind of riff on some topics there.
Yeah, I mean, before we get into that, I think it's also important to remember, like I brought up the Zoom comparison, but Zoom is basically a one-trick pony. I mean, they've kind of expanded beyond that, but they're basically a video conferencing service, right? Nvidia has multiple businesses. Now, their GPU business is driving the growth, obviously, but they have other things going on, and the gaming business, to name one. And so there's like a whole diversified business there, and obviously they don't want to see the GPU business that's being driven by all of this LLM inference stuff that you just alluded to, but they have other things going on and on their plate, and it's so that diversification will probably work well for them, and as they kind of work through this.
Then we have the news that OpenAI released GPT 4.5 and admits to running out of GPU capacity.
Right.
The Microsoft CEO had some stuff to say. So, what kind of just talk us through some of the stuff that happened?
I mean, it's like on the one hand, but on the other hand, right? That's what it was constantly trying to prepare for this week. Yeah. So Satya goes on to a podcast last week, and he says that they're gonna probably lease more than build in the next 2 years, 27 and 28, which is pretty shocking because they've committed $80 billion to building this year. So what changes in 27 and 28? And when you think about all this capacity, even though we're seeing as much capacity as they build, the capacity is being put to use. There's very little data center capacity open right now. Like, people who are trying to lease are having trouble because there's just not enough open space. But he sees a possible oversupply, and this is something, Shomik, that I've actually been thinking about. Like, is there a point where the market gets saturated even for GPU and data center capacity? And he thinks it's coming. And I'm going to read his quote. And he says, because I look at the builds and I'm saying, this is fantastic. The only thing that's going to happen with all the compute build is the prices are going to come down. And that he said that in the Shwarkesh Patel podcast. And now that's super interesting, right? And I'm gonna raise one more point, and then I'll pass it off to you. Bloomberg reported last week that Microsoft had canceled some leases. So you got him talking about like increasing his leasing capacity, and Bloomberg is reporting that they canceled a couple of 100 megawatts, which is not insignificant, of capacity, in the last couple of months, according to TD Cowen, which is a research firm that follows this stuff. So you got all this stuff going on. You got all these contrasting things happening, these kind of contradictory statements, and it's hard to know how this is going to impact the market.
Yeah. I think what's interesting about all this is, so one, definitely we still have like every single cloud provider has said that they are kind of supply constrained, right? So not demand constrained. They have more demand than they can meet. And so actually, if you look at, I forget, somebody on Twitter shared a pricing chart, but if you look at pricing at like AWS, for example, for GPU instances, it's up significantly because of the fact that like there's just, it creates that supply demand imbalance that's going on. So I think, like, again, long term, we have these trends. I do think what you're mentioning, Ron, is interesting for people to think about in terms of like, we have been talking about at what point is there a digestion period, right? And there has to be, right? You can't just like build forever. And with the comments from Satya and the news on the data center, our good friends at SemiAnalysis, Doug O'Loughlin, who's been on this pod before, kind of mentioned, hey, that was out there before, but like within the context of what he just said on the Dorkesh podcast, it sort of gets you to think like, what's Satya seeing on the overbuild side, right? That makes him be like, maybe I should kind of think about that. So I think like this is one of those things where like in the short term, there's going to be so much freaking noise, and like we're going to be chasing and looking ahead one way and one way, and hopefully we can kind of talk about that on future ones. Long term, like AI is still changing so many different things. There's going to be massive demand. Everyone is bullish on it. People want to use it, but just it's one of those things where we have to work through some of that, kind of potential overbuild, potential overshoot in the meantime.
And it's interesting because I didn't listen to the whole podcast, but I did listen to the highlights. And one of the other things that he said was that, the way that you win is this is a compute power game, right? And that you win by having, massive amounts of compute power, which is what Stargate is all about, right? It's like, how can you generate these massive amounts of compute power to kind of use that almost as a moat, right? And so, on the one hand, he's saying all these things that seem to contradict one another, or these different reports do, but he recognizes for sure that having massive amount of compute power is a way to kind of separate yourself in this market.
Well, so in the midst of that, right, we talk about Satya saying like, "Hey, we're gonna pare back and be a little bit." Meanwhile, Masa-san over at SoftBank is borrowing $16 billion to fund one initial tranche to OpenAI,
Right.
and actually it's gonna be higher than that. OpenAI comes out and says we got 400 million weekly active users on ChatGPT, and then Grok 3 gets released, basically trained on the largest GPU supercluster to date, beats all the other models on benchmarks, all these sort of things. So like just, like on the one hand, we're talking about, hey, there might be this air pocket. On the other hand, we
Right.
have this massive pool of capital. ChatGPT is growing like crazy, and Grok, shows that the pre-training sort of wall still hasn't been hit. So kind of what are your thoughts on some of that?
Okay, well, there's a lot to talk about there. So let's talk about briefly about the loan. Okay, so you know they seem to be like pouring cash into OpenAI, and it's kind of funny because Elon made fun of for
For
not
not
having
having the money. Yeah.
right. And so like he was kind of banging on them on X for not having the money. He's like you're investing in it, but you don't have the cash to do it. So that's kind of funny on one hand. Then you have, so as you said, you have OpenAI releasing GPT 4.5 to mixed reviews, right? It's a new version, but it doesn't reason, and supposedly it has like personality. I haven't used it yet, but that's what I'm reading. Casey Newton on Platformer News said it was kind of fun to use, but what, at the same day that they released this, on the same day, Sam Altman admits on X that they've run out of GPUs, right? Like,
Crazy.
how does that happen? How does a company the size and scope of OpenAI, who's supposedly investing $500 billion over 4 years to build data centers, run out of GPUs? It's just an astonishing admission. And it makes me, it made me wonder, like, why not wait? So at the same time, he said, don't worry, we'll have, quote, tens of thousands of new chips next week. So if you have tens of thousands of new chips coming in, like in 4 days, why not wait 4 days? Why like feel this pressure to release now? And I think there were two factors. One was Grok 3, as you say, and one was Claude 3.7, and they both came out. Grok 3 had, what was it? It was 100,000 Nvidia H100 GPUs, right? 10 times more compute to train versus Grok 2. So, I mean, big numbers, big model. Goes back to kind of what Sai was saying. You have more compute power, you can build models that are more powerful. And they come out with these benchmarks, and these benchmarks are supposedly like, wipe out OpenAI for what benchmarks are worth in this game. I mean, it's sort of like, like when you bought stereos back in the day. It's like when you're a consumer, it doesn't really matter to you how it benchmarks, just as long as it sounds good or it answers your question well, right? but they set it benchmark. But then it was interesting because my old colleague Kyle Wiggers at TechCrunch reported that there was a kind of controversy around those benchmarks. So whether they were quite accurate or not is up for debate. Let's put it that way, and it's being debated in the community even now. So that's a lot to unpack. But the fact is that we have three new models in the course of about 3 days, and that's a pretty remarkable rate of change for the people that I talk to on a weekly basis to deal with. Like, okay, like everything is just sort of coming at them, and frankly at us, right? It's coming at us, and we have to kind of digest this stuff, and we have to, and before you even have time to kind of think about, well, what's Grok 3? What's GPT 4.5, and how does it compare to the previous model? How do these things compare to one another? Then there's a new one, so it's a remarkable rate of change that we're all dealing with, and this is just 1 week of news.
It's crazy. I mean, this goes back to, again, we're gonna have these conflicting thoughts of like, are we hitting a wall? Are there, like, are we hitting an air pocket? All this sort of stuff. And meanwhile, then have breaking, innovation on the other side. I think the couple of points that I would add to that is, so on Grok 3, I think, like, we had Ilya, who previously was the chief scientist at OpenAI, right? He did that talk about like, hey, we've hit a pre-training wall, and it sparked this whole conversation: is there a wall? Is there not? Right? A bunch of podcasts with different people on it, all that sort of things. I think Grok 3 just showed us that, like, no, that's not the case. Actually, like, we can definitely throw more compute and more scale, and we can see better returns. To your point, what does that better returns mean in the context of like our usage? I think that's still TBD, but like, by whatever benchmarks they use, it still shows that you can get some performance. So I think that's one important kind of takeaway. The other thing I would say is that, each of these models is starting to almost like verticalize a bit. And what I mean by that is, like, so Grok is like this, like, it's funny because you said like GPT 4.5 is like supposed to have this personality. Like, that is Grok, right? Grok is like uber personality, right? It's like fun. It messes around with you. It's like it's almost disrespectful sometimes, right? And
it's one of the ones I haven't used yet.
It's a lot of fun. Just like mess around with it is so much fun. But like, it's much more like almost like culturally relevant in the sense of because it's using Twitter data. And so I think like that's one thing. Like, Grok is sort of this like culturally relevant, like just like quirk, like funny, like, sort of a thing. Then you have kind of Claude saying like, hey, we're going to collapse all these models into one, right? So there's reasoning. There's no more like going to be, hey, here's our, to use the terminology in OpenAI, O1 and GPT-4 and, so on and so forth. It's all going to be under one model, right? It's all going to be combined together. And that's like amazing for builders, right? For all of us who are experimenting with these things and stuff, to not have to then choose between like model families within the companies and just be able to choose one. Like, oh my God, huge unlock, and like not a pain in the ass to have to route between those different things. So I'm really excited for that. But I think, again, like, Claude is starting to move more deeper into code and into developer workflows, and that's really interesting. And then OpenAI is trying to be much more like kind of consumer, and then build certain applications around that. So I think it's something to watch, that like we're starting to see them choose their lanes and start to verticalize. And we'll see kind of where those end up. But Ron, anything else to add to that?
Yeah, I mean, it's interesting that you said that because last week my friend Dion Hitchcliffe, who's an analyst at Futurum, he posted this statement that, in context, I'm saying it out of context, but he basically was talking about how over the last several decades, 70% of IT projects fail. And it's something that I talked about in my commentary this week in my newsletter. But what I did was I asked Google search, Claude, Gemini, ChatGPT, and Perplexity. I asked them all this question about, is this statistic accurate, and point me to, research reports from valid research firms that either confirm or deny it. And the funny thing was that there were some variations, but for the most part, I found I got the same answer across all of the the intelligence models, and even Google search to an extent. But they were very specific, obviously, in the models. But the idea was that there's lots of variation, and it's kind of hard to nail down this figure. There's some validity to it, but it depends how you define failure. And I mean, there's a lot of factors that go into it. But that's the point being that when I asked 4 models the same question with the same prompt, I got a lot of the same responses back. And some used a few different research reports. There were variations, but, I thought that was interesting. And it kind of led me to the conclusion that maybe, we're starting to see some commoditization across, models, that all of the models, well, they may be training on different data, but there's still only there's a finite amount of data out there in the world. And these models are starting to feed back in what seems to me very similar fashion. And this is a limited experiment. I'm not saying this was like in a lab, and I can definitively say they're being commoditized. But I thought it was interesting from, anecdotally, that I tried this and I got very similar responses.
That is very cool, and I think I think that for the consumer and for the builders and us, like there's going to be some nuances or things like that, but in general, like let's be honest, these are just amazing models.
I mean,
They're pretty useful for us regardless. So
absolutely, absolutely, and I think that as you use them, and I've been trying to find ways to use them more in my job. As a single person running a newsletter and a blog. If you can query an intelligence engine and get that kind of information back, it's tremendously powerful, and it's sort of the difference. I've talked about this. I've said, like, if you think back 25 years ago, a journalist, wanted to get information, they would have to go to a library and speak to a research librarian, right? And I remember in J school, being taught how to, like, be nice to research librarians. They're your friend, right? And you still should be nice to them. They're good people. Um, but, but I mean, Google changed that, right? Google made it so you didn't have to leave your office and go do that initial research. You could Google and get a lot of information, and then you come back. You fast forward, if you pardon the expression, 25 years, and now we have these intelligence engines which take that, like uh, exponentially forward into another realm in terms of providing assistance to somebody doing the kind of work that we do.
Moving on to some other topics here, there's one that I think stood out to just so Stripe, publishes an annual report, and it's a great read. Highly encourage folks to check it out. But one of the interesting things that's relevant for us on the enterprise segment is they actually had this chart that said medium time to annualized revenue milestone, and it said the top 100 AI companies on Stripe in 2024, and the top 100 SaaS companies by revenue on Stripe in 2018. And what's interesting is you clearly can see the top AI companies scaling much more quickly. In this chart, they have it from 0 to 5 million of ARR, and it takes 24 months for the AI companies and 37 months for the SaaS companies. And so, AI clearly having an impact, really kind of bring this forward. This is the innovation that, like, Ron and I are talking about here, right? Is driving this. And the only other thing I would mention is just Confluent had their earnings, and one of the things they've actually mentioned was Cursor, which is the IDE that's AI driven, that's over 100 million of ARR in a very short period of time. But it's really interesting to see a public company calling out a startup in their talk as a key customer win. And I think that's just, like, again, goes back to AI is real. It is having a massive impact, and all that innovation we're seeing is kind of that reason why we're excited here. Ron, anything else you'd like to add to that?
It's interesting that you brought up Cursor, because I hadn't really heard much about them until I interviewed the CISO at Shopify. And the interesting thing about this guy is that he runs a very tight ship. I asked him his philosophy on startups, which I ask all the executives that I speak to, as well, how do you work with startups? And he said, well, basically we don't. And I was like, well, that's an answer I haven't heard before. But then he brought up, like, he said, like, we do try to, look carefully at what's out there, but we're very careful about what we bring into our stack. And he talked about Cursor, and he said that they very quickly, he analyzed Cursor, saw it had value to the development team, and rolled it out pretty quickly. And for a company that doesn't work with startups that much, to find a company that they see so much promise in that they're willing to roll it out to their entire team was pretty eye-opening to me, and I've been paying a lot more attention to that company.
Well, it's also interesting. This is more from just like the founders that we work with at Boldstart, right? Is that I would say at the earliest stage, right, as they're starting to build, we are seeing people hire fewer engineers because of the fact that the CTO and the early founding engineers are using Cursor or Windsurf from Codium to just like greatly scale their efficiency and their resources. So, really cool. We're seeing it. It's going to impact margins positively for these businesses at some point in the future. But like right now, it's probably just it's hard to see from the outside. But like for the founders and the builders that we talk to on a daily basis, like it is 100% changing the way that they're doing their work, and gets them excited, right? Like they're all fired up to be not having to do a lot of these mundane tasks. So I want to move into some of the other topics that we have here. So Ron, it's kind of interesting. I forget when they acquired this company, but Microsoft announced they're finally deprecating Skype, which RIP. I remember that. That was the good old days. And then, the week before, actually, Amazon shuttered Chime. So, kind of what's going on in the space.
So it seems like, Zoom and Microsoft Teams has won, right? So talk about Skype. I mean, they were started in 2003. They were really the first kind of, video and call service that you used over the internet. And they were quite effective for a long time. And maybe until, 2017, 2018, they were the big game in town. Microsoft bought them in 2011 for what was a huge sum then. What was it? It was $8.5 billion, which was a lot of money in 2011. It's still a lot of money.
Well, maybe not that, but $8.5 billion is like chump change for the numbers that we hear these days. But yeah,
that's right. When you're like $3 trillion company, but $8.5 billion, and then there was a lot of talk back then, like, why are they buying it? What are they going to do with it? And they didn't really, I think, know what to do with it. Eventually they built Teams, and as they built Teams and pushed, into, and leaned into Teams, Skype became less and less relevant. I think in 2018, they shut down Skype for Business. Once the pandemic hit and people started really using Zoom in large numbers, Skype became less relevant. So over time, in a way, it makes sense that this is the end for Skype, and that Microsoft doesn't want to confuse customers. There's one platform for speaking over the internet, and it's Teams, whether you're a consumer or a business. So that's that. Amazon. Most people, I don't think, if you ask the person on the street, if you ask 10 people that Amazon had, a video service, probably 9 of them wouldn't know it. People like me, I'm a journalist. I interview people at Amazon, and over time, whenever you had, a conversation with them, they would send you a Chime link. And that was the only reason that I was familiar with it, really, was because, they used it internally. But it was only used internally, for a large part. And the company finally decided, it's not worth running our own platform. We're going to deprecate this and make Zoom the official standard. I mean, I think people can use whatever they want, but it is the standard choice inside of Amazon now.
Yep. I think it's crazy how you have these massive acquisitions, but
Right.
what we don't know is what it ends up powering within the businesses afterwards. But moving on to our next topic, so IBM announced they're going to acquire DataStax and also complete the acquisition of HashiCorp. It's part of their continued build out in sort of going into DevOps. But kind of what stood out to you about some of the things that was happening there?
So a couple of things. I mean, it's sort of, IBM is trying to collect these kind of open sourcey companies, right? HashiCorp kind of gave up their open sourceness. Not quite. I mean, I don't want to cast aspersions, but, they changed the license and they pissed a lot of people off. Let's put it that way. But then they were sold, and it kind of made sense in that context. IBM, you put Red Hat, you take HashiCorp, you take DataStax, you take some of the other pieces that they've bought over the years, and they're kind of creating a nice little stack of software that, can run, in the enterprise. But, the interesting thing was not the deal itself. It was that, to me, was that DataStax had a valuation of $1.2 billion not that long ago, and the price wasn't revealed. Now, and if it had been $1 billion deal, that would seem like it would have to have been revealed. So I'm speculating here, but I'm speculating if it was immaterial, that it wasn't that big a price, so that they didn't have to announce it to the. It may come out, in some filing in the coming months, but they didn't announce it at the time, and I thought that was super interesting. But from a technology standpoint, DataStax, gives them Cassandra, which is, it was a big deal back in the big data days of, like 2010 and Cloudera, and, those companies were growing like gangbusters and had crazy valuations. And, the times are changing, but I still think that, all of these data platforms, you look at Confluent just had a great quarter, and part of it is because they're data streaming. So anything related to data has some power right now, because data is so key to all of this stuff related to AI and getting these models and getting the data into the models.
Yeah, I mean, I would say like we're just going to see more disruption in the data space going forward as you start to have models talking to the data, and even more increasingly agents talking to the data, right? So I think
Right.
all of a sudden, where we went through this kind of I would say like almost like verticalization of databases, right? And we had we had graph DBs, and we have document DBs, and we had all these sort of things. We might actually be now going more to like a wider funnel, in the sense of like much more of a more generalizable database nature, where whatever could most allow interactions with these agents is probably where it's going to happen. So I think you're going to see potentially a lot more of these sort of data stacks type unnamed acquisition price outcomes,
Right.
just because in many cases the platform has shifted. But to your point, Ron, like there's just still a ton of enterprises that are using some of these, I hate to call them legacy, because they're not that old, but
Right.
some of these legacy technologies, and they still need support, they still need versioning, they still need maintenance, and IBM is well suited to provide that to them.
Right, right, and when you look at all of the pieces that IBM's putting together, it's, as you say, legacy is kind of a tough word for it, but they're putting together a collection, if you will, of software products that have some sort of open source components, and that's an interesting development.
Next on the docket, we actually we had something that was kind of in the VC world that just want to talk about was General Catalyst had some news out that they're going to IPO as the first VC fund. My whole thing on this is just like kind of who cares? Like we like to treat it like it's such a big deal in the VC world. Like, oh my God, they're IPOing. It's like KKR, Blackstone, Brookfield, like Apollo, Carlyle, all of them are public on the private equity side. Venture is no longer a cottage industry. It is becoming much bigger. It's a larger asset class. And so, I think whether GC is the first, or Andreessen, or whoever else, I think you're going to see more of this. And frankly, they've been actually fairly compelling investments once they go public, because they continue to perform over the long term. So it's just interesting thing, but I feel like we sometimes cause a little bit too much hype on the VC side about this. The next topic we have is actually a pretty crazy one, because again, this is like we just talked about all the the questions around Nvidia. Then we talked about like, wait, but like all these crazy models were announced, and they're running out of GPU capacity, and then you have Salesforce coming out and saying the news that they won't make significant revenue from agents this year. So kind of Ron, what are your thoughts there, and kind of any more context to add around that?
Yeah, so last week Salesforce had their earnings. It was single digit, kind of mature company territory of 8%, revenue gain. But the big news was that, somewhere in the presentation, the earnings call after the report came out, CFO Amy Weaver said that, in spite of the fact that they had 3,000 or claimed 3,000 new customers using Agentforce last quarter, they wouldn't start to see significant revenue from that until the first quarter of the next fiscal year, which starts basically a year from now, February of 26. So that's a pretty stunning admission, I think. But right up there with running out of GPUs. so, so this is a company that tends to get ahead of the game. I mean, whatever is big out there, Benioff has always been big about getting his company behind it, and staying as up to date as it can for a company that's 20 something years old. And I guess it's not surprising that they're not going to make money on this until next year, but it is a little surprising that they admitted it. and they're out there, they're selling this stuff. Today they announced a an agent marketplace, which is kind of like the app marketplace, the app store that they put out in 2005 or 6. And this will be a place where companies can kind of create agents, and much like the apps, either take these agent pieces and put them into other agents or run them as standalone agents. And that in itself is pretty interesting conceptually from an enterprise perspective. But again, they're making all these moves. They're really bought in to agents, and they believe that's the future. But it's apparently going to take the market that they deal with, which is the hardcore enterprise, and which I continually write, moves much more slowly than even the vendors do that they buy from. And so the vendors are always like trying to push enterprises to the next thing. And enterprises are under serious pressure right now where AI is concerned. But I think agents are, this, they just sort of came out of nowhere. We were talking about generative AI and, using kind of putting an interface on top of everything where you could suddenly ask the database questions. And that's very powerful, but it's still us interacting with the AI. To be able to take the AI and make it do something, to move through a workflow, and then maybe get stuck and say, okay, I'm going to try this. 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 Oh, that didn't work. I'm going to try this, and to be able to like keep working until it finds a solution or not, and saying, look, I need help. Those kinds of things, that's going to be super powerful if they can be pulled off. But it's early, and everybody involved in this admits that it's early. So maybe it's not surprising that they're going to be, they're not going to see significant revenue from it, but they claim, significant customers using it. And it may be that, this is a difficult uh, product to price, right? It's very challenging to price agency. If you're pricing on outcomes, how do you measure outcomes? If there are multiple agents working from multiple vendors, who gets the credit? Who gets paid? There are a lot of open questions around agents, and I think that's probably why, or at least one of the big reasons why, they're not going to see significant revenue until some of these things start to get sorted out.
I think one of the crazy things too is just frankly, like the scale of some of these companies too just makes it so that even if you have a fast growing product, like if you had a cursor, like essentially you had like a cursor type revenue growth at ServiceNow, right? Like now is growing really quickly, and they're having a bunch of attach rates to their platform, but like it still doesn't meaningfully impact a $10 billion number when when it's 1% being added. So I think it's one of those things of like there's just it's like it's to your point, it's like the enterprises are getting excited. They want to see this future. They want to see where it's going. That being said, like it still takes time for them to adopt. It still takes time for them to understand the data security. It's how the implementation will work, all that sort of stuff. And also, frankly, like if like I think Salesforce talked about Singapore Airlines using their agents for support, and it does beg the question of like when they use something like that, what happens even with the workforce transition, and how do you manage that, right? These are big questions that they're now having to answer with adopting an agentic AI platform that is not as simple as just saying, oh, hey, let me buy it. It's like, does that mean that we're, potentially laying off some employees or right sizing the organization. I think that's like just the trend that we'll have to continue watching as more of these AI kind of solutions get adopted in the enterprise. But it's the wave is coming. It's just like it just takes longer in enterprise.
It's always slower than you think, right?
Yeah.
Because as technologists always think we're going to go from 0 to 100, it's going to go from no agents to everybody using agents, and the world doesn't necessarily work that way. And just one quick thing about worker replacement, or I was speaking to the CTO of Amalgamated Bank, and he was saying that he's a union bank. Obviously, he's got pressures to not replace jobs, but he looked at customer service as an area where it's hard to keep good people. So if you're looking at customer service and you're getting this constant turnover and you're doing this constant hiring and constant training, and then you have this solution that can kind of solve that problem, that's not necessarily replacing workers, that's replacing an area where it's not a great job and people don't stay in it for a long time. So maybe, that's a good use of AI, in terms of worker versus technology. And, I know that a lot of CFOs are looking at this as job replacement, but I kind of, and maybe it's wishful thinking on my part, but I kind of think that it's going to be more like that there are going to be areas of the company where they have a hard time, getting enough employees, and the AI helps supplement that in a meaningful way, and kind of takes away that pain of constantly hiring and retraining people.
Yeah, I think that's I don't know. It's going to be a crazy thing to watch, especially for different companies that are exposed to different unions or whatever. The tariffs and what's happening with potentially General Motors free cash flow, if that is enacted, it certainly leads to some other dynamics potentially with the unions and stuff. So, but so last topic I wanted to cover is I think Google had released Willow, their quantum chip. It seems like then recently, like Microsoft and Amazon or something, were just like, oh, we can't be left out of the race. So, what's going on in the world of quantum chips?
Yeah, there's been a couple of releases recently. Amazon released a chip last week that's more like a traditional kind of, without getting too deep in the weeds, which I can't because I'm not that technical, but I've talked to a bunch of people about it. There's a more traditional way of using qubits, and Microsoft released a chip that was a different way, and I don't want to get into it because I don't have any notes on it, but the interesting thing about the Microsoft chip is a different way of approaching quantum computing. There's some question as to whether that way will work or not. On one hand, you have Microsoft kind of releasing this new chip and saying they made a breakthrough. There's some people who are experts who are pushing back and saying, well, yes and no. And then you have AWS or Amazon, releasing their own chip, and it's this whole attempt to kind of push quantum forward. It seems to stay kind of stuck, and I'm not sure what it's going to take. There's going to have to be like a chat GPT type breakthrough in quantum at some point. They keep making progress in terms of the number of qubits that they can keep active, the number of things. And I'm sure you know that these things are highly volatile and they require like ridiculously low temperatures. And, this is, the science behind them is wild, but there are, from what I've been told, certain kinds of compute problems that are well suited to quantum computing that maybe aren't as well suited to AI as we're using it right now. And each of these is another step forward in the technology as they kind of attempt to get to a place where quantum can be commercialized and put to work. It's not quite there yet, I don't think.
It's really funny because in my investing career in 2014 was when I first started looking into quantum computing, and Rigetti, which is now public, D-Wave Computing, and a bunch of others, and it was going to be on the come, and it's still on the come. 11 years later, and I think to your point, it's cool that they're coming out with these chips. I think Jensen has publicly said that he still thinks it's like, 5 years out or something.
He said 20.
He said 20. Okay. All right. So maybe a little bit longer than that. So,
but again, like if quantum comes along, that's probably going to eat into his margins a little bit. So.
I just, I think it's one of those things of like, let's see. I'm glad that progress is happening. It's going to unleash a whole can of worms around security once it does happen.
Right.
It's going to be wild. So, but in the meantime, it's really cool that at least these companies are using some of their profits to fund this innovation and see if they can move forward. So, but Ron, anything else, before we wrap her?
I just wanted to say it reminded me in some ways of blockchain in the enterprise, right? I covered in like 2017, I was writing about blockchain in the enterprise because, much like investors, you're kind of looking for what's coming as a journalist, right? And blockchain looked like it was coming as an enterprise tool. This is separate from crypto. And, I looked at it and there was a lot of plumbing being built and there were a lot of startups, a lot of action. And then it just sort of didn't go anywhere. And maybe 5, 6, 7 years later, I looked at it and, I saw, what? It's still basically in the same place they're building plumbing. And it hasn't made a lot of advances. And, there's a lot of people working on it. They want to make blockchain an enterprise tool, and I can see places where it would fit. But I think there's kind of an analogy with or a linkage to quantum in that way that you can see that somewhere down the road this could be useful, but we just haven't gotten there yet.
Yeah, and as we talked about, enterprise adoption of those things will even take longer once they are mature enough. So, but yeah, well, thanks for coming on, Ron. Hopefully, audience, hopefully you liked it. Please, leave us comments. Let us know what you think, and hopefully there'll be many more of these episodes to share with you all. But yeah, we look forward to the craziness that is in the world of AI right now and enterprise, and lots more to come.